Hello from Otet Markets. This is Avira, and we'll be with you with the global economic outlook in the week ahead, which is going to be the week number 11 in 2025. Last week, the main focus of the market it was on the PMI numbers in one hand and U.S. Labor market data, while the central banks in Turkey and United in Turkey and Europe also had a monetary policy meeting and interest rate decision. Generally, the PMI numbers, which is publishing from the most developed and developing economies, confirmed that PMI manufacturing PMIs we had on Monday and service with composite PMI we had on Wednesday. Generally, the published data showed that manufacturing sector is slowly increasing, getting slightly better generally, while the service sector is getting under pressure slightly, which is most economies is confirming the same pattern. In Europe, I have to mention once again that the Spain and Italy, they are the main the main market mover, the main economy mover in Eurozone, and they're getting stronger. They're getting probably this year, these two economies in Spain and Italy, they're going to be the best European economies. We have to wait and see what's going to happen. This is what we got till now. Central bank meeting on Thursday European Central Bank meeting on Thursday ended in line with expectations with 25 basis point rate cut as it was expected. Right now, the main deposit rate in Eurozone is 2.50%, 2.5%, down from 2.75%. As I said, it was in line with expectation, and because the Eurozone economy is getting more under pressure, and it's not something that we should. I mean, it was something that market was expecting. But the concern was on that. The change was on that in the statements European Central Bank mentioned about the inflation. So that's why the tone of the statement, it was a little bit more hawkish than it's expected. Also, we had at the same day, we had the central bank meeting in Turkey where the CBRT cut the rates by 250 basis point or 2.5%, from 45% to 42.5%. CBRT held the rates at 50% for a long time, which put the pressure on the Turkish economy. So now it's the time when while the inflation is under 40, fell under 40% from 85% that they had last year. So with the lower inflation and slower economic growth, the central bank had no other choice to cut the interest rate, which is expected to continue in the next months as well. So right now we have the high inflation, high interest rates still in Turkey, but there is a sign of cutting the further. Besides that, we had the unemployment rate in Russia, which is increased to 2.4% from 2.3% registered in December, and retail sales increased by 5.4% in January after 5.2% increase in December. That was the main important data from other economies, and from United States, the focus was on NFP numbers. Generally, with NFP data, we had I have to mention about the export in Russia, sorry, in China and United States as well, before going to talk about the labor market. Chinese import fell by 8.4% in February, and export increased only 2.3%. Both of them, they confirms that the global demand and domestic demand is very low right now, and the central bank and the government should have more stimulus to support the economy. We have to wait and see more updates from the government, both and central bank in China. With the inflation numbers that we are expecting to see in the next week, in the week ahead actually, which in this week, we are expecting to see the weaker inflation. The central bank and the government going to have a more challenging days. In United States also, we had the import and export data, which shows that the import increased much more than export. Let me find it. An import increased much more than export. The main reason of that, it was because the many companies, they were trying to import the goods before the tariffs start to escape the new tariffs. So that's why the import in January increased much faster than expected. Even yeah, the export also increased, but very slightly from 266.5 billion to 269.8 billion. But imports from 364.6 billion jumped to 401.20 billion. That was the main, as I mentioned, the main reason because it was because of the starting of the tariffs. So many companies, they had more imports before new tariffs applied. So that's why the trade balance fell sharply in the United States. But it's not, it was the seasonal. So it's what I have to say. We have to wait and see what's going to happen in the long term. We had GDP numbers in fourth quarter, the last reviews of fourth quarter GDPs in Eurozone as well, which showed the European economy in the fourth quarter slightly increased better than expected. On labor markets, the data shows that in United States labor market, the data showed was not, I mean, the data didn't had any surprise. It was not such a good data, and it was not a bad numbers as well. Unemployment rate from 4% to 4.1%. Government jobs from 44K fell to 11K. Private jobs from 81,000 increased to 140,140K, which shows that the labor market in the private sector is moving much better, increasing much better than government sector, which is what the new administration in the United States looking for. And also, the data showed that we had 151,000 newly created jobs, slightly less than 159,000, but much better than 125,000 created job in January. So generally, the data shows that economy is improving. The labor market is still improving. It's still fine, even though it's slightly better, slightly less than expected, but the labor market is fine. While it has a signs of cooling, but still it's fine. So that's what we understood from the data. For the week ahead, the week ahead mainly will focus on the inflation numbers, especially from China and United States. In China, as mentioned, after weaker import and export data, now the inflation will be at the center of stages. We expect to see the inflation on the monthly scale in the February to fall by 0.4%. After 2 months of slight increasing, this falling inflation will be disappointing actually in the economy, which is expected, as I said, to bring another more reactions from the central bank and government. We don't have any other important data from China, but since we are in Asia, let's say that on Tuesday, we're going to have very important day in Japan, where we are expecting to see the GDP and householding spending. Both numbers, they are very important. The last reading of the fourth quarter GDP of 2024 supposed to show the better economic growth, while the GDP price index also supposed to increase from 2.4% to 2.8% and confirms that the central bank in Japan has more reason to increase their rates. While the householding also supposed to increase and show that the people in Japan, they are ready to spend a little bit more money for their living. In Europe, we don't have very important data. Mostly we're going to have the inflation from some European countries like Germany. On the other hand, I have to mention on the energy front, I have to mention that this week, we know that the last week, the OPEC, they announced that from April, they're going to start increasing the previously cut production by 138,000 barrels per day. But with the increasing, we know that the United States inventories increased much fast in previous weeks, and the expected increase in production in non-OPEC countries. So the OPEC, the energy ministry of Russia had some comments that it confirmed that maybe the OPEC, they're gonna pull back from their decision, and they're gonna go back from their decision and not increasing the production. So let's see, and wait and see what's going to happen. But the next week, we're going to have more important data from OPEC monthly report. We're going to have the IEA and EIA monthly report, which about the energy report on the February. both these all these trade reports, they're gonna show what's the amount of the demand and supply in the energy market, especially in the oil market, oil, gas, and electric. So they're going to be very important for energy markets. You have to follow these reports and read these reports as well. On top of that, in United States, we're going to have the inflation numbers on Thursday and on Wednesday and Thursday. On Wednesday, we're going to have consumer price index. Both headline and core inflation, they're supposed to increase by 0.3%, confirming that the inflation still, the central bank, the Federal Reserve, will face still the more challenging days to lower the inflation. So inflation is still sticky. That's what we're expecting to see from the inflation numbers from United States. So with this data, with especially also on Thursday, also we're going to have the PPI, Producer Price Index. The Producer Price Index also supposed to show that production inflation, the prices for the production is also still sticky and not lowering so fast. Generally, with the labor market data, these data supposed to confirm that the Federal Reserve for now will continue its wait and see policy and not cutting the rate, and we'll have in March in next March 19 meeting, and we'll have more probably the more hawkish tone. On top of that, we're going to have the central bank meeting in Canada, where we're expected to see the BOC to cut the rates by 25 basis points to 2.75% from 3%. The reason we are expecting for this is because that a central bank in Canada, with this rate cut in the Canada, we are expecting to see that more support from the economy, to see this from the central bank. Why? Because the new tariffs from United States can put the pressure on the Canadian economy. So the central bank is seeking for more, more supporting policies from the economy to avoid the negative effect of tariffs on Canadian economy. So that's what we are expecting to see. That's why we expect to see more rate cuts. Even if they not, besides of the cutting their rates in this meeting, we expect to see that the central bank in the statement also will talk about the more rate cut in April and May meetings. In the first quarter, we are expecting to see at least 50 basis point rate cut to 2.5% from currently 3%. Yeah, this is what we are expecting to see from the Canada. And now let's check the charts with this. Let's see with this data what we are expecting to see on the chart. This is a US dollar index chart with the natural data from the labor market, and with the ongoing geopolitical tensions. US dollar didn't fall much on this Friday. Slightly even increased after NFP numbers, which is supposed to continue the correction in the coming week, because the inflation also expected to show it is still sticky. So with the US dollar index supposed to increase above 104 in the next week as well, and continue slightly higher and get more correction above 104. With the published data on the stock markets, we expect to see more pressure and continuing this slightly downtrend in the S&P 500, Dow Jones, and the Nasdaq. So with the slightly downtrend in the stock market, we expect to see the demand for the safe haven, especially for the gold, to continue increasing. And with the gold after previous fall correction, right now the gold is moving above its 61.8% Fibonacci level, and now we are expecting to see the prices higher than this, especially if it can go above 2,930. The uptrend can continue further. About the oil and energy market, I mentioned the increasing the supply from the OPEC brought this idea that maybe with the more supply in the market, the price can fall. But at the same time, the other news that maybe the reverse this decision, and geopolitical tensions increasing with the continuing attack from Russia to Ukraine, which is still the peace talk future of the PSOC is unknown. So these decisions of this overall market condition brought this idea that the oil will not have much more rooms to fall. So for now, 67 and 90, $69 is fair price for oil. This is what we can see in the chart. On the cryptocurrency market, for the first time, ever, we know that the last week, White House, we had a summit, crypto summit in the White House. The White House held this crypto summit. It's the first ever time, and the government finally decided to have crypto inventory. I mean, the crypto reserves as well, but the market is got disappointed from that. They are not going to buy the new cryptos, new Bitcoins. They're going to use the currently held cryptocurrencies from illegal ways that the government, I mean, after with the cyber attacks that they have these Bitcoins, they are already actually under control of the central bank, under control of the government, which the police and government offices actually they got that because of illegal. I mean, they found it from illegal companies, and they are already holding this Bitcoin, so they are not going to buy the new Bitcoin. So these reserves, it's going to start with the current Bitcoins that they have. That's why the market slightly got disappointed from this decision. So no more demand for the market. But I mean, but still, as it is the biggest economy in the world, they decided to have the Bitcoin reserve. So it's still the good news, which means that in a long term, in the medium and long term, it's going to support the prices. From the technical point of view, the 90,000 is the main pivot right now. Above or under this level can confirm the new direction. This is generally market data and comments. If you had any other question, write down in the comment section or try to get back to you as soon as I can. Have a good time. Bye-bye.